Hello everyone and welcome back. We are going to continue the saga of our oak table, job 101. At this point, what we have done is we have put all the direct materials, we have done all the direct labor, we have applied the overhead, and we determined that this table has cost us approximately $460 to create. We know exactly how much in direct materials it cost. We know exactly how much in direct labor it cost. We estimated the overhead, and that's good enough for now at this point in the year. And right now, all of those costs are sitting in work in process inventory because up until this point, it has been sitting on the workroom floor. It is in process. Well, what happens when this table is finished, it's completed, it's polished, it's sanded, it's smooth, and it's sitting in our showroom, or it was even sold to somebody else. But right now, it is sitting in our showroom. So it's no longer in process. It's not a work in process. This is finished. So how do we move it from work in process to finished? Let's just take a look at the journal entries right now. Up until this point, let's take a look at what we've done. This journal entry right here was moving raw materials. This is purchasing raw materials. We purchased $1,500. We moved some of those $300 worth of oak lumber into our work in process because we needed it for this oak table. We also had some glue here that we needed to put in the workroom. This glue was not necessarily just used for the table, so that's why we put it into manufacturing overhead. We also had some labor that was put into it. Jane worked a full day. She worked 4 hours on job 101, but that's not all she did. So we put $120 towards job 101, $105 towards job 102, and then 15 minutes of cleanup that we couldn't directly trace to either the table, which is job 101, or the chairs, job 102. Cleanup is just everything, so we can't trace that directly to a job, and so that's why it went to manufacturing overhead. And we also had $40 here of other overhead costs, for example, electricity or something. This was our predetermined overhead rate, saying right now we said, well, there's about $200,000 of overhead costs during the year, about 20,000 hours that we expect to be put into tables and chairs and other custom furniture. So when we're building this table, we spent 4 hours. That ends up being $40 of overhead. So that's what that last entry is. But now we're all done with the table. Right now, what do we have sitting in our work in process inventory for this specific job? Well, we can look at our job cost sheet, and if we made the journal entries correctly, this $460 should match what we have in our accounting records for work in process. So all we have to do is move that $460 from work in process over to finished goods. So we have one more journal entry here. And that is going to be moving it out of work in process. And I usually just like putting job 101 here. We had $460 in there, and we are going to put it in finished goods. That's another inventory account. So remember, we do have 3 inventory accounts for a manufacturer. They are raw materials, which we dealt with, work in process, which we also dealt with, and now finished goods. So those are the 3 different types of inventory. Finished goods are the ones that we are done with. It's sitting on our showroom, ready to be sold. All right. So let's say a few days later, the customer comes in, loves the table, and buys it for, let's say, $800 on account. So we priced it at $800. Again, the whole point of this job costing is so we know how much it costs us, so we know how to price it. So we priced it at $800, guaranteeing us a profit. So this next journal entry is not any different than what we are used to from financial accounting previously. It is just making a sale. The complicated part about manufacturing is knowing how much the inventory cost us. With retailers, it's pretty easy. I bought it and then I sold it. I know exactly how much I bought it for. Manufacturing, it's much harder to trace the costs, but we've already done all that work. We figured it out. We know the table cost us $460. So we're just going to do a normal sale entry. We debit our accounts receivable, 800, credit sales revenue, 800, and again with a sale, when we're selling a physical product, we're going to have cost of goods sold, and that cost us 460. Under a retailer, we use merchandise inventory because that's what a retailer uses. For a manufacturer, this is coming out of our finished goods inventory. And that cost us 460. So that is the journal entry that needs to be made, or the journal entries. So let's trace. So we looked at the full journey of the cost for job 101. We took the direct materials, direct labor, put those to work in process, and the job cost sheet, which should have the same numbers. We used our predetermined overhead rate to apply the $40 of manufacturing overhead. When it was finished, we moved it from work in process to finished goods, and then when we sold it, we record the sale just like we normally would, and then we move it from finished goods to cost of goods sold. So we have now successfully followed a job from start to finish. One last question to answer. We said that $40 of overhead was an estimate. What happens at the end of the year when our actual electric bills and rent bills come in and it doesn't match what we estimated? How do we change that or figure things out to match things up?